Hey everyone, me Kevin here. We've got to talk Tesla. There are 4 major red flags that we need to discuss before the next earnings, reports in Q3 and 4, and 2 green flags that could help us offset these red flags. The very first thing that we need to discuss is one that isn't the most sexy, but it has to do with currency risk. I'm going to keep this as simple as possible. The stronger the United States dollar is, the more sales we want to see of Teslas in America. Because if we sell cars at a higher degree in China or Europe or Great Britain while their currencies are falling relative to the dollar, then we are going to take a larger dollar impairment on our next earnings report, which means a lower earnings per share, which means potentially less momentum going forward. This has happened before, so this is no unique surprise here. Take a look at just the last quarter. We had a foreign currency adjustment of negative $421 million to net income. That is in contrast to a $63 million gain in the prior year. We know that foreign currency fluctuations are going to be a big deal in this next earnings report, not only because of what happened in the last quarter, but take a look at the charts. They've only worsened. This is the euro relative to the US dollar, down 17% year over year. This is the Chinese yuan, down 10%, with a lot of that drop actually happening in the third quarter, which is the next quarter we're going to see a report from Tesla on. And the Japanese yen dropping 23%, also with a lot of that happening in the third quarter. That's that sort of right half of this chart. Again, going through those charts, you really see the pain in the right half when the dollar's been strengthening. This is an issue because Tesla also keeps a good chunk of their reserves in foreign currencies where they are conducting transactions. In fact, take a look at this directly from Tesla's statements. Balances held in foreign currencies had a US dollar equivalent of $5 billion. That means out of $18 billion of cash that Tesla has, more than 25% of it is held in foreign currencies, which could have been impaired in excess of 10% over the last quarter alone. That's devastating, because that could be a $500 million to $1 billion impairment in currency holdings alone if Tesla hasn't moved these to dollars. This is a real risk to the Q3 earnings report. And even though I really expect excellent deliveries in Q3, it could all get squashed under currency risk adjustments where we end up getting a very low earnings per share, and it looks like Tesla isn't as profitable as it really ought to be solely because of currency adjustments. This will be very frustrating because I actually think that deliveries in China will slow going into Q4, which means maybe the currency issues won't be that bad, but then we'll trade those for a Chinese slowdown. And the Chinese slowdown is actually the second big issue that we have. The Chinese slowdown is very, very real. In fact, when you look at companies and in an earnings call, CEOs or executives talk to you in an earnings call about how they're trying to be competitive with their pricing, that means they lack what I call PP, also known as pricing power. We regularly talk about PP in my courses on building your wealth, link down below. There's a coupon code expiring on Friday, it's the 30th, and we'd love to have you there, just like we'd love to have you as an investor in House Hack, which has a deadline this Friday as well for accredited investors who want to get their maximum amount of warrants possible, up to 65% in free warrants, which are kind of like call options, but a little bit different, okay? Read the PPM and you'll learn all about it at househack.com. But this is my startup and I'd love to have you as a part of it. But folks, when executives tell you they lack pricing power, which could be implied by saying we're trying to be more competitive, it's a sign of demand going down in that region. And take a look what was literally in Tesla's last report, right here. For example, these cost reductions in manufacturing have allowed us to competitively price our vehicles in China. This is straight from the Tesla earnings report. This is a sign that not only are we going to face substantial currency risks, which hopefully, we move a lot of that Chinese demand that might be falling off to the United States. That could offset a lot of this pain, right? If we get a lot more United States delivery as opposed to European delivery or Chinese delivery, fine. Maybe the currency exchange issue won't be that big of an issue. That would be the dream. And hopefully we've converted a lot of these foreign currencies into dollars, although Tesla's not exactly known for currency hedging. That's because they pretty much basically say they barely currency hedge. You could read the reports and you could see that. But anyway, the point is, we know China's economy is getting crushed. We know Chinese demand is going down. It's going down so much so that in order to try to induce demand in China, they actually gave away this insurance subsidy in China to anybody who bought a vehicle between September 16th and 30th. They basically gave people $1,140 if they chose Tesla insurance. I mean, that's like a year of free insurance if you buy a Tesla. That's basically a price cut. Even though it doesn't really cost anything for Tesla to provide that, it's basically a price cut, right? You are providing an incentive for somebody to pay a little bit more. It's like when you get an EV tax credit, which I think will be a big boost to electric vehicles in the next few years. Way too soon for any of these EV tax credits to really be considered right now. But in the long term, these will be phenomenal, especially for Tesla, and they'll really help margin, because basically what you're doing is you're reducing the cost that somebody has when they buy an EV while allowing the manufacturer to charge more, right? That means bigger margins. That's the inefficiency of the tax system. You would expect that buyers and the manufacturer would kind of share in that benefit, right? That's generally economically how it works. The buyer gets a little bit of a cheaper price and the manufacturer gets higher margins. But anyway, we want to see more Teslas sold in the United States. We need United States demand to stay up. Now, I'm a little bit concerned about that and US demand for a couple of reasons. The first reason that I'm a little bit concerned is that United States demand has never been like 80 or 70+% of the demand that we're seeing for Teslas. So it's unlikely that we're going to see anything different from this particular chart here. This chart shows you vehicles delivered in the United States, China, and other areas like Europe or New Zealand or whatever else, right? And let's just ignore the 3 months ending June 30th here, because that's when Shanghai was shut down for a moment. Let's look at 2021 in the summer. About 24% of vehicles went to China, 32% went elsewhere like Europe, and 43% went to America. Okay, well, this is bad, because that means more than half of all vehicles are actually sold outside of America, which means we take a foreign currency hit, and it's going to suck. Okay? The good news is, in the last 6 months, we've trended more towards America, with now more than half of vehicles delivered in America, and while Shanghai was shut down, we had up to 57% of vehicles delivered in America. But still, with Shanghai mostly shut down, we still only had 57% of vehicles delivered in America. So I'm expecting a big FX hit, foreign exchange hit, and it's going to suck. But it's not just historically what Tesla has been delivered. It's very simply, if you just go to tesla.com, okay, I hate to say it, but if you just go to tesla.com, and even though in the last earnings report, Elon Musk tells us, oh, we have no problem with demand, there's plenty of demand, we've got, the issue is batteries and materials, those are the limiting factors, not demand, that's fine. But hey, if I want to buy a Model 3 right now, yes, I'm not going to be able to get the long range because they're not accepting pre-orders for that right now because the wait list is too long for that particular kind of battery set. But if I want to get a battery, presumably a cheap one from China, and I just want to get a basic Model 3 right now, my delivery window is as little as 1 week from now, all the way into December. Okay? So, but this as little as a week from now is kind of scary because it does mean that those windows have substantially compressed. And we know that the order backlogs for Tesla are starting to fall. We know this because Troy Teslike on Twitter, who's absolutely brilliant about finding this and conducting this sort of research, absolutely give him a follow. But take a look at this. This is your Tesla backlog in units. It's plummeting. Well, which makes sense because we're going into a global recession. Like, we understand that. At least we still have the buffer. I'm totally okay with this backlog going to zero and then people who have money being able to get a Tesla right away. As long as there are enough buyers to absorb everything that Tesla produces, I'm happy. I just need more of those buyers to be in the United States because the currency disaster is going to suck. I can't understate how bad it's going to be. Let me give you a little bit of research on this, okay? This is not what I wanted to click. This is a study that shows you the relationship between Tesla stock and what happens with foreign currencies. That sounds really complicated. Let me just make it very simple for you. When the Chinese yuan goes down, the stock goes down. When the Chinese yuan strengthens, the renminbi, when it strengthens, stock goes up. Well, unfortunately, the Chinese yuan right now ain't doing too hot. It's going down. So that's not a good heads up for Tesla stock in the near term. So we've got a foreign exchange risk. We've got this demand disaster in China. We, for some reason, have Tesla holding $5 billion in foreign currencies, which have all devalued now by at least probably 10%, certainly at least 5% just in the last quarter here. The dollar has strengthened so much. And we've got this concern that, hey, well, maybe we could just ship vehicles to America. But if you ship vehicles to America, that costs you more money in shipping. And quite frankly, even while Shanghai was shut down, we were only able to deliver 57% of vehicles to America. That is not very exciting in terms of thinking, oh yay, strong dollar, this will really help us. Now, there is an offsetting benefit to a strong dollar. A strong dollar does make it cheaper to buy materials. That could be good, assuming hopefully Tesla keeps most of their earnings in dollars and not in the Chinese yuan, like which, they've said we have $5 billion of Chinese yuan and pound sterling. And don't even get me started about the pound sterling, okay? The pound sterling, the pound, the great British peso, the great British pound is basically at parity with the dollar. It's at like $1.07 right now. It's insane. It fell as low as 103. And this is really because the government wants to, okay, we don't have to go into this. I made a whole video on this. But basically, the government's actually doing some really interesting things in the United Kingdom. They're like, let's cut taxes and let's encourage people to keep more of their own money so they'll get off their butts and they'll actually go work, and then we'll have more people working. And if we have more people working, we can bring costs and inflation down, and then we won't have this massive labor shortage. Geez, imagine that, lowering taxes to encourage people to work. It actually sounds great to me, but this is not supposed to be a political commentary video. This is a video about Tesla. So the next thing that we have to remember about Tesla is this commodities factor, right? As I was getting started to talk about here, is that Tesla will or should benefit of having dollars to purchase commodities. For example, here's just a comment from an article in 2016 where the author wrote, for example, a stronger Japanese yen caused Tesla to suffer higher battery component costs for its auto manufacturing line. I actually think this was written in 2017, but they were talking about 2016. Anyway, and they say here, why? Because its battery cells made in Japan by Panasonic had prices denominated in Japanese yen. So what's interesting about that is if battery components are actually denominated in Japanese yen still today, a lot of the batteries that we then source from Panasonic or whatever. Well, as long as we have lots of dollars, and hopefully not Bitcoin, then we can take those dollars and actually buy commodities at a cheaper level. And this is actually a green flag for Tesla. I don't want to come across as just a bear here because I think of myself as a very realistic person. I think that's why hopefully you subscribe to this channel, is because if there's news and it's bad, I give it to you. If there's news and it's good, I give it to you. But this is really interesting because commodities are plummeting. And this is a very, very good thing. This is the Bloomberg Commodities Index. And you can see that commodities are certainly more expensive than they were last year, but they've certainly plummeted. This is a 1-year chart, by the way. Sorry, I cut off the very bottom there, but it's a 1-year chart. So the right side is where we are, the left side is 1 year ago. And you can sort of see the peak there around March, the war, probably Feb to May-ish in the peak there. You can see commodities have come down to a level that's essentially slightly above levels that we saw last year. But it's nice to see commodities come down because that helps increase margins for Tesla. So you've got lower commodity costs, which help Tesla, but then you have this massive foreign exchange disaster that's going to come to Tesla, which is going to hurt Tesla. Not only that, but you have Bank of America researchers indicating that the estimated raw material cost per vehicle to produce a car right now is actually plummeting, which is very good because, with the exception of in China, Tesla has substantially increased the prices of their vehicles. And if now the cost of those vehicles is plummeting, well, then that means more margin. And we like margin. We don't like when margin calls, but we do like margin when it comes to looking at earnings reports. So this is a good thing. So we've got, again, a negative factor of currency risk, big negative. I mean, I'm talking 500 million to $1 billion negative here, okay? Chinese demand will get absorbed elsewhere, but the problem is, are those shipping costs going to kill margins, right? That's a potential issue. A good thing and a green flag, so we've got 2 red flags. A good green flag is that costs in commodities are plummeting. This is great. But another red flag is that actually we are potentially entering what is being considered an automotive recession. And that is because, take a look at this. This is the US seasonally adjusted annual rate of car sales. And what I want you to do is basically just look at the blue lines. And you see this blue line where my laser pointer is over here? And you see how kind of low this area is? If you kind of trace it back, you go all the way back to 2011 levels. And the trajectory is down. And if the trajectory is down, then we could soon be in 2008, 2009 automotive recession levels. This is according to Bank of America's global research, by the way, on the automotive industry. In addition to that, U.S. consumer confidence in U.S. auto sales is, I mean, honestly, this should go without saying. If you really needed a chart to know that consumer confidence has plummeted to already basically the levels of the Great Recession in auto sales, well, fine, here you have it visually, but it seems like it should be relatively obvious, right? So, okay, all right. So we've got some good and we've got some bad. Again, currency risk, bad. Chinese demand, bad. So much so, by the way, on Chinese demand, I forgot to put this up. I thought this was very interesting. Take a look at this chart, again, from Troy on Twitter here. Take a look at this one. Giga Shanghai appears to have switched Model Y production to exports. On September 21st, buyers from Australia and Japan started receiving vehicle identification numbers on September 21st. Normally, they would start occurring on September 26th. So in other words, we're getting more exports from Shanghai sooner, almost an entire 5 days sooner. 5 days out of a month. That's somewhere around 18% or something like that, right? 5 divided by 30 equals 17%, 16.6. So 16.6% earlier, a move to exports. That's because Chinese demand is getting crushed. It's just more evidence of this. It's a problem, and that costs more money. But then you're also shipping to these countries like Japan, where now you're going to sell and you're going to receive the Japanese currency. But I don't think we want the Japanese currency. That sucker lost 23% over the last year. This is terrible. This is very bad. Okay, but again, not here to be fuddy. Currency risk bad, China demand bad, auto recession bad. Costs and commodities plummeting, great. But in addition to the cost of commodities plummeting, we also expect, according to Goldman Sachs research, that vehicle margins should substantially be increasing because of the ramping of Berlin and Austin. You see it on screen right here. The ramping of Berlin and Austin will help reduce the cost of goods sold. Cost of goods sold is expected to fall to about $36,000 per vehicle in 2021 from an average of over $70,000 in 2017. Obviously, that's when they were producing more of the S's and X's, but the point is, this is incredible. I mean, a $36,000 cost per vehicle, and that's an average since you've got more expensive vehicles and longer range vehicles or whatever. This is phenomenal. But the more Berlin and Austin get online, the less of Tesla is actually being produced at Fremont, which, as they say here, is a converted ICE factory. That means it used to basically produce internal combustion engine vehicles, which is much less efficient of a factory than something like Berlin or Austin. We should continue to see margins go up. So there's more good news here, right? So we've got this balancing act here of good news and bad news. In addition to that, Martin, the head of investor relations, was at an event, and Goldman Sachs reported that he suggested that the long-term demand environment is still strong for Tesla. And they still had a record month of production in China. Do keep in mind, though, they're talking about production in China, not about deliveries in China. And while China is slowing, as they mention here, they see Tesla China as an export hub. That's great. You can manufacture vehicles cheaply in China, crank them out, just as long as people are buying them elsewhere. And the best case scenario is that the people buying these Chinese-made vehicles are Americans. I want Americans who are spending money on cars right now, which is the stupidest thing you could do. If you're buying a car right now, I feel like you're an idiot. And I'm sorry if you're buying a car right now. It is just stupid. You should take your head and like hit it against the table and hope that like the little, like as they said in Germany. In Germany, they would always say, "Sie haben Ihr Tassen nicht alle im Schrank." You don't have all your glassware properly organized in your cupboard. You know, maybe that'll help you reorganize your brain a little bit, because I don't understand why you would be wasting money on butter in the depths of a recession when you should be saving money to buy real estate and stocks. But hey, maybe you're not a member of my courses on the psychology of money and you're wasting your money on a stupid car. Meanwhile, here I am, heavily invested in Tesla, telling you not to buy a Tesla. Maybe I'm the one who needs my psychology and my Tussin checked, but I'm just being honest. Anyway, so, okay, this is actually good news though, right? So like Goldman, actually bullish. They've got a price target of like 335 on Tesla. That's great. I mean, we're at 285 right now. Please, I'll take that, because that brings us back to $1,000. You know, I'm still in kind of like pre-split numbers here. But look, folks, if we end up getting any kind of reduction in production or the copy and pasting of gigafactories, we're gonna have to lower our 2025 projections. And I hate to say it, but that's exactly what I'm going to do right now, is I'm going to lower my 2025 projections. All right? 2025 projections. End of 2025. Unchanged is my expectation of an average selling price per vehicle of around $52,000. However, folks, dun dun dun, I have reduced from 5.8 million vehicles expected in 2025, I've reduced that to 4.9. Ooh, that's $900,000 vehicles of a reduction in production that I am now estimating because of what I believe will be a very dirty global recession that the United States will actually, I think, fare quite well through, but other countries are just gonna get reamed through. It's gonna be a problem. By the way, I did an interview today, and I'm like, you know what Tesla should do? Tesla's got the money, okay? Tesla should build factories in the like hardest places, or the hardest hit places in the world right now, economically. I believe Poland is actually an excellent choice. It doesn't have the disastrous regulatory environment of Germany, where there was just like a whole New York Times article about how like the German police go around and round up people for leaving social media hate. So if you leave a hate comment and you're in Germany, you could get your house raided by the German police. Die Polizei! That was a crazy article. It's a true story too. Somebody called a politician a penis and they had their house raided. God. I kid you not. It's what the story said. I mean, maybe we don't believe the New York Times, but it's what the story said. Okay. I really have no idea where I was going with this, but now I'm going to have to pause the video and try to understand what the hell I was going to say, because this is actually... Oh, Poland! They should build a factory in Poland, because the Ukrainians who were replaced in Ukraine, and I'm not trying to be like an idealist here, I'm trying to be a realist. Like, you have less regulation in Poland. Go build in Poland. You're still part of the EU. You've got the buffer land of Ukraine. That sounds terrible, but it's true. And you just had a crap load of people flee Ukraine looking for work in Poland. You have a captive workforce in a very recessionary environment in Europe. Go build factories there. The same thing is what you should do in China. China has started tens of thousands of infrastructure projects. They will deliver you, despite the drought they had, water, electricity. They will give you whatever you want if you just go build in China right now. You could get land cheaper because real estate's plummeted like 30%. You could build gigafactories cheaper in China. You've got another captive workforce because the Chinese economy is slowing down. And I'll tell you, the Chinese are smart freaking people, okay? That government is... Like them or not, they are smart people. If Elon Musk is like, yo, give me 3 sites to build some gigafactories on, they are going to roll out the red carpet right now and provide electricity, power, and people for Tesla to build vehicles. And if we can build them cheaper there, we can ship them around. Ideally not sell them in China because, the currency issues, sell them in America, great. No wait times, hey, instant delivery, a 24-hour delivery for your Tesla. I mean, probably not, that'd be really expensive, but you get what I'm saying? Fine. But the point is, that's what Tesla should be doing, in my opinion, right now. But in the meantime, we, I think, are going to see estimates for growth slow down for Tesla. So unfortunately, that does mean that I believe that Tesla's growth in 2025 will actually slow to about a 40% vehicle delivery production rate. That is unfortunately below the 50 to 60% that we're aiming for in 2023 and 4 and now. But unfortunately, I think that is likely. We will see. However, despite all of this foreign currency disaster and negative EPS impact, which I am actually, just to make my life simple, building into a softer margin. That's not what you're supposed to do. It's just what I'm doing to make my life freaking simple, okay? I believe that Tesla's margin, despite everything that I've said in this video, I believe Tesla's vehicle margin will go up to 31%. That means the expense margin would be a convenient 69%. Okay, but this becomes very important because when I show you the price, you're going to see a huge difference that just 2% in margin can make, and it'll show you how important it is to pay attention to margin. But anyway, despite the currency issue, I think we'll be somewhere around 69%. As usual, I give very, very little credit to robotaxi income, full self-driving income, insurance income, semi-trucks, robots. I don't give a crap about all of that right now. All of that is icing on the cake. All of that is my Warren Buffett margin of safety. And so if you want to debate me about these vehicle numbers, I'm game. Let's go. But don't talk to me about all the speculative stuff because that's just the margin of safety. Anything positive coming out of that is just going to help contribute to this and give me some safety in these numbers. But I'm not going to rely on those right now. Instead, I'm going to rely on the fact that right now, with these projections that I've just given you, I believe we're going to see the following numbers for Tesla. Of course, there's no guarantee, and even though I am in the process of becoming a licensed financial advisor, I can't give you financial advice. And this video is certainly not financial advice. I believe that with the tax rate probably going down to about 19% with new credits and factory build-outs and depreciation that we'll be getting from Austin, I believe that with 3.4 million shares outstanding, we can expect to see earnings per share of somewhere around $10.33, which actually creates a forward price to earnings ratio of 27.4. Now that's actually pretty dang good for Tesla. Because that, while that is forward to 2025, there are a lot of folks who are like, oh, Tesla's so overvalued. It's got a price to earnings ratio of like 180. Yeah, well, if you're saying that, you're literally looking at trailing 12 months and you've probably never looked at an income statement in your life. Okay, so if we're looking at forward PE ratio, Tesla, like for 2022, we're probably sitting somewhere around 55 to 60. And quite frankly, that roughly matches their EPS expected growth rate, which gives them a PEG ratio of close to 1, maybe 1.5, depending on how you look at it. And in my opinion, that's actually a really good deal right now. Unless, of course, you compare to AMD, which looks like an even better deal. Unless also you're looking at trailing 12, but then again, you need to look at some statements and do some math. But anyway, so the PE ratio that I am now going to use for 2025 to come up with a future valuation of Tesla by taking the earnings per share and multiplying it by that PE ratio is now reduced from 65 to 55. I blame the recession. It is true. I blame the slowdown in the valuations market, but I believe Tesla will or could trade for a 55 times multiple with the growth I expect them to have in 2025 in 2025. That creates a per share price of $568. $568 represents a compounded annual rate of return for the next 4 years of 19%. If, however, margin comes in 2% lower, whether it's because of commodity prices or because they have to reduce prices to get demand to come back up, or it's just EPS is lower because of foreign exchange issues, which is entirely possible. If EPS ends up, or just margin ends up 2% lower, so that is the expense margin is actually, or the profit margin is 29% on these vehicles, all things considered, instead of 31% like in my other chart. The price would actually potentially only go to $500, which represents a 15% compounded annual return. So you see an almost 2 percentage point return on your compounded annual return the next 4 years for every 1% in margin we see at Tesla. That's huge. That's like, you write that down on a Post-it note. That shows you how important margin is. But it's not just going to be margin. It's going to be, I promise you, it is going to be foreign exchange at this time. Now, again, I can't make guarantees. My promise is worth exactly what you paid for it, which is literally zero. You paid no money to watch this video. Maybe you had to sit through some ads. Maybe you had to sit through me saying that I have a coupon code that expires at the end of the week, and that if you want to wire money for House Hack, you should do that before Friday, so that way you get the most amount of warrants. Yeah, maybe you had to go through that. But you also got to experience me saying, when Tesla comes over here and tells us that they have an income in the quarter of $1.1 billion last year Q2 and $2.2 billion this year Q2 with the Shanghai shutdown. This, by the way, considering about a $421 million currency adjustment. If we end up getting a $1 billion currency adjustment, we could actually end up seeing this number here go to something like $2 billion, because maybe it would have been 2.7, but we get it this massive currency adjustment, and people are gonna go, oh my gosh, EPS is declining. So, I don't know. I hope not. I told you I'd give you an update, but I still hold pre-split over 26,000 shares of Tesla. So I want this sucker to go up. But there are definitely some potential headwinds I hope Tesla and Elon have figured out. Thanks for watching, and good luck.